All right, everybody, welcome. Good afternoon, good morning, wherever you may be. Let's get started with this week's broad market analysis. We'll get started with this week's major U.S. economic reports and Fed speakers. As you guys can see, tomorrow we do have Veterans Day holiday. For myself, I plan to probably be in front of the charts or the mic for about 2 hours or so. And then I personally am going to go take advantage of some of those veteran deals that are out there. A lot of restaurants participate in Veterans Day, and you can find yourself a crazy deal. And I did 21 years, so I wouldn't mind getting out there and taking care of, be taken care of, I should say, on that special day. But I am looking forward to what this market has in store. Right now, futures in cryptocurrency are just hopping. And I'm really interested to see if this is going to kind of show its face as well in the market. So we'll be talking about that and talking about levels. And I want to remind everybody the US economic reports and Fed speakers are just a catalyst that pushes price to supply and demand. So anything that I talk about in here, we're not sitting on our hands, not in the trendy room. We specifically find these levels and we wait for the catalyst to push price into those, and then we execute at those levels. The idea of supply and demand is to align yourself with bigger, smarter money, and that's exactly what we like to do here in the room. So on November 11th, again, Veterans Day. Happy Veterans Day to all our veterans out there. The bond market is closed, and then coming in on November the 12th, we have, you could see here, a lot of Fed speakers. Anytime that I see that a lot of Fed speakers are coming in, I automatically think chop. All right, chop until it's not. And again, we'll go over this on charts. Wednesday gets a little bit more interesting. As you guys can see, we have CPI year over year, and then we kick off with a lot more talking. So a lot of talking coming up this week. Thursday, Federal Reserve Governor Adriana speaks, same thing. And then a little bit more interesting as we have initial jobless claims, producer price index, core PPI on Thursday. So Wednesday and Thursday look pretty fun. And then Friday, we have import price index, industrial production capacity utilization, business inventories, and so forth. I want to go ahead and look into the next week. We have home builder confidence, housing starts, nothing going on here. And then Thursday, initial jobless claims, and then on Friday, S&P. So the next week then becomes a little less noisy, if you will. But I still expect a lot of stuff to happen or news to come in from the elections, with a newer president starting to step up. There's a lot of information being pushed out there, and it could impact the market. So just, don't think that volatility is over, is all I'm going to say. The next thing that we're going to go ahead and take a look at is going to be this week's earnings. And I like to come over here on X and use Earning Whispers. Some of my favorite names, I do like to trade into earnings if I see a good setup there. What that means is I look for supply and demand, and especially if I notice that we've been coming into a lot of demand before the earnings, I'll typically go long into the earnings with debit spreads, and sometimes I just trade straight up. There's a couple names coming in here that I do like this week. Shopify, Kava is one of my favorite names that we went over this year, and it just blew my socks off. Like, I didn't think that it would move this much, but yeah, it just keeps moving, and you hear a lot about valuation, but really at the end of the day, at this point, we just want to focus on price. Home Depot also reporting. Spotify, one of my favorites. So Kava and Spotify, one of my favorites going into this week, like far as like I want to see how they perform. And then over here on Wednesday, we have Cisco. And that is, Cisco is pretty much the only one that's really catching my attention there. And I don't even really like to trade Cisco, but hey, it's on a Wednesday. Thursday, Disney. I haven't looked at Disney in a long time. I mean, months and months and months. Maybe I'll take a look over there. AMAT, and then moving on down. JD.com. This may be interesting. And then other than that, I feel like it's pretty slow this week. Of course, we have Baba. Been getting a lot of questions about Chinese names and so forth. And I'll take a look at them probably this week just to see if we have a setup there. I wouldn't mind trading it into earnings, but it really has been a dud this year. I mean, I say that it's actually been one of my biggest percent winners this year. I made 1,600% in Alibaba calls just a couple weeks ago. That was amazing. But, you know, the question that's really on investors' minds is this going to be a good swing play perhaps into 25? And again, my focus will be there, but I'll be presenting those charts a little bit later in our room. Okay. Let's go ahead and move on. The next thing that we want to be looking at here is going to be SPY on the bigger picture. As you all know, I love talking about the quarterly. This has really helped me this year and keeping my portfolio balanced. And I would strongly suggest that you also look at the bigger time frame just every week to kind of remind yourself of what can be and really not to get sucked into the small noise. Well, I shouldn't say small, into the small picture where there's a lot of noise. These quarterly candles, again, represent a quarter, each one of them. What's really nice about TradingView is that if you look over here, they allow you or they tell you how long the candle has until it closes. I find this really interesting. You have 1 month and 22 days. It feels like yesterday that I was sitting on a panel talking about this very moment, you know, saying that we could see that every quarterly candle this year close up. And that's exactly what we're seeing, which is really, really impressive. So 1, 2, 3, 4, 5 candles so far, just straight up. All right. Now, I think on a monthly, we had maybe 2 months close inside, but overall, it's been a very strong year. When I get to this chart, I think it's really important to let traders know, you know, where this 9 EMA is and where this demand zone is. I've talked about it every week, and just in case the market decides to have some kind of bigger pullback, I just want you to be focused there on the quarterly chart. As far as targets this week, you know, we hit new targets, which means price went up, right? And so our bull channel that we use has also moved up. So please take note of that. The notes for this week, a huge week up after price came down into the trendy edge and the weekly 9 EMA. Last week I left you with, hey guys, we came into the 9 EMA. It could be sideways to down until we come into demand, or we were looking for that weekly 9 EMA to work, and boy, did it work. And we were on the right side. It was amazing. We timed this perfectly. So far, 5 quarter candles up, and we have 1 month and 22 days left. We have new targets and support. Your target now is going to be 614, and your support is 555 by, it's supposed to say, sorry, 555 by 526. Okay, let's go ahead and change that while I'm sitting here. So I'm going to come down here because I'll forget. All right. So 555 by 526, this is your longer term support. The quarterly 9 EMA is at or around the 507 level. And if you're looking for something that's a lot closer in support, you're going to use these Fibonacci extensions that I've been giving you for targets. Now that we went up and over this target here, we're going to use this as support, which happens to be around 581.58, and current price is trading at 598.19. And if you were to look at your ATR, your average trading range, that 581 probably falls into that downside if we were to pull back. So I'd look for buyers to show up there in that area. Now, that's not using structure or anything like that. That's just simply saying what was going to be a target is now going to be support since we surpassed it. So the idea is what was resistance now becomes support. Okay, so again, that's just a near support level, and our longer support comes into these levels. This level, I would especially be a buyer, and down here at the 9 EMA and or the demand zone, I would definitely be a buyer. Okay, so just kind of a scale-in approach, if you will. The next thing that we're going to look at is going to be the QQQ. Let's go ahead and put this on the chart. And same thing here. We finally broke through that target of and what was a huge resistance level, which was the high. We finally got up and over that. And so this does open up some new notes here. And that level now becomes the immediate support level of 503. So this level now becomes support. So that's your immediate support level. And the monthly structure is now a beautiful inside and up formation and stays that way as long as price stays above 487.70. Target is now 524. So let's make sure we go over those levels really quick. So 524 being a Fibonacci extension, we do not have supply over into the left. We're at all-time highs, so therefore we're using Fibonacci extensions. The near-term support level is this 503 level, and then I talk about the levels down here. All right, this 473 and 448, that is the bull channel. If I hover over this, you're going to see I'm going to freeze the screen here. I'm using my Fibonacci's from here to here, and this is going to be your 23.6 and your 38.2, which is the overall bull channel. Okay, so again, my target 524, just a Fibonacci extension. Okay, and then this level, the 487.70, let's go over here to a monthly. Okay, notice that we have this beautiful inside and up formation. What I'm looking at here, if you guys go to my videos on YouTube and you're studying and learning about demand, is when we see a structure being formed that I know is a demand zone, then I predict that price is going to continue to move up and create a beautiful demand zone. And then at some point when it slows down, we'll come back and we'll test this monthly demand zone. All right. So right now, just as a disclaimer, this is a monthly candle and it's only the 10th of November. All right. So this can change, but that level that I'm giving you is me taking my line and going right above the body, and that's where that level of 487 is coming from. So this stays a demand zone and an inside and up formation as long as we hold that 487 level. Okay. All right. So let's go ahead and move on. That's going to put us now into the DXY, or the dollar. So we're going to come over here, and that's DXY, and that is the dollar. Now, a couple things of interest here for me is the weekly. I talked about it last week. It looks really bullish. I mean, the dollar came back, it tested the cloud, it found support here, and then it pushed right up here. Now, in a lot of cases, when the dollar's moving up, we're looking for the market to pull back, but things might change here, so I want you to be open-minded. Yes, we should be concerned, but at the same time, you know, the dollar came up and it rejected pretty close to the 88.7, and then we have a supply zone here. So if we're anticipating that the dollar could move into this area, I'm also anticipating it will reject here, which in turn could create some bullishness to continue in the market. Let's just say for some reason the ES futures and the Nasdaq futures, the RTY and the Dow decide to pull back a little bit. What I would be doing is watching this chart very closely, and once we hit supply, then I'm looking for the dollar to drop and then perhaps the market then to move right back up. Now, it's a different look if the dollar continues to move up and the market continues to move up. So again, be open-minded. Obviously, we're going to follow price. Price is king, but these are just a couple dynamics that I'm always watching when it comes to my broad market analysis. So right now, the dollar, there's no change for this week. Price has sustained momentum over the cloud and above the 618. So yes, I'm looking for strength in the dollar. Possible move to 106.4 as long as 103 holds. Over 109, I feel as if the market most likely may go into a panic, and you're going to hear a lot about the dollar. Now that we finished the dollar, let's go into the TNX, or the 10-year treasury. You can see here that the treasury pushed up into the 618. We got the rejection. That is expected. You can also see it gets a little bit confusing, and I apologize, but this right here is just your regular coefficients that I'm using for fibs. And you know, if I click on this, then you realize like where I place them by looking at, you know, the dots, you know. So my Fibonacci is from here to here, and this is my coefficients. This red zone is placed underneath, and that's a supply zone. So we've come out of that supply zone, we broke down. I anticipated that the 10-year would come all the way back into 3 points, and I was exactly right. I also anticipated that we would see a bounce here, and we were exactly right by using supply and demand. And then here, the Fibonacci's are very, very important. If it doesn't get over the 618, I really expect it to go sideways and back down. If it gets over the 618, just know that you could see a move all the way up into 4.8. Listen, I think pure panic if we get up and over 5, but for right now, just kind of a sideways chop is what I'm anticipating. I would be, you know, kind of waving that yellow red flag if we break and hold over the 4.47. Okay. Let's go ahead and move on now. We're going to talk about the skew. We'll try not to talk about it too long. I sometimes get super passionate about this chart because it works very, very well. This year we've been hanging out in the box, and as long as we're in the box, we're basically just going long anytime it comes down to one of these levels. If you get the opportunity to go long here, it's worked the entire year. You just buy a couple days out on the SPY. And it's worked over and over and over. You want to be cautious as we get, you know, up above this 148 level. But in this year's market, even over 148, it's still a risk on environment. I know it says risk off, but we have a long area here we can mess with. And that brings me, you know, you want to take this chart, you want to understand what's going on with it. Then I would tell you to go over to Google, or you can watch a video that I've done on the skew in the past that can help you. But basically, these are your hedge funds. And they're saying, hey, this is where we want to protect, and this is where we want to be risk on, and so forth. Basically, the higher the skew, you want to be thinking, okay, let's take some profits. Let's be careful up here. And the lower the skew falls, that means there's fear in the market. That means people are, you know, really on the put side. And that's where we want to take advantage of that fear, and we want to start to get in and or scale in long. Okay, so we're kind of stuck here this year. We've been spending a lot of time in the average area of risk off, and that's not paying off for anybody that doesn't understand how to adapt to the market. So we've adapted, we've done well, and we'll stay on top of it. Okay. Let's go ahead and move on. So I'm sorry, let me go back just 1 second here. So the skew is 150. There is room for caution here. That's going to bring me into the fear and greed index. The fear and greed index was sitting at almost neutral last time we talked. It was at a 49. Sorry, it was neutral, almost right in the middle. And then, you know, the scales have tipped to the right-hand side here. And that makes sense as investors show their confidence after the election by putting their faith in the upside. As this tilts to the right-hand side and that skew starts to move up, basically what it's saying is that the overall participants in the market are starting to skew to the long side. And listen, when I look at this, I think about a Ferrari or like a fast car, you know, getting on the track. And I'm thinking, okay, this is where I can drive, and this is how fast this baby can go. And I have to ask myself the question, are we really that far? Also, one thing that I love to apply in life is my Fibonacci that I teach to you guys. So think about this from a Fibonacci standpoint. This is the 618, right? And your coefficients always start from a 0 to 100, okay? And we're sitting over here at 61. Now, the fear and greed does not, you know, read 61.8 or anything like that. But from this angle, and when I'm looking at it, I could use my Fibonacci. Once we're over the 618, we have an 85% probability that we can hit 88.7. So if those probabilities show proof here, that means that we can get extremely greedy going into this week. All right. So we'll just kind of go back and see how that plays out. So from a Fibonacci standpoint, it looks like we could, you know, push the scale over here to the right-hand side into extreme greed this week. All right. So that's what I got for the Fear and Greed Index. The next thing I want to talk about are the ES futures, and the ES futures. My first thought here, we're going to go into Thinkorswim, is of course I'm bullish. I've been bullish this entire year. We've almost timed every perfect dip. It's pretty impressive. I almost feel like, sitting here when I was doing these charts, I'm like, man, we've just been so fortunate this year. A lot of things have really worked out, and I just absolutely love, teaching and showing you guys the proof of concept. For example, these are the same charts we've been using for several weeks. The levels only change when we make new highs. I'm adding different levels to the upside, but this is a beautiful example of using a Fibonacci. Yes, there's some demand here. We can see it right there. But this also, there was confluence between the bull channel and the demand zone. So prices pull back for 2 weeks. They came into the 9 EMA last week, but they also came into the bull channel. And I left you with, I was expecting a bounce into the open on the futures. Okay. So, and then it got a little weird as we got closer to elections. And then I came out and I gave two targets to the upside and downside. And I made it a point last week to say, listen, like, we're looking for bigger moves than expected. And we got exactly that. And it really paid off, because I felt like a lot of traders I was looking over all the analysis out there, and sentiment is a lot of traders felt like, we're just going to barely move or something. And, hey, we got a really big move when we look at it. We came into 5740 and we're sitting over here at 6023. And at this moment, it's not necessarily over. What I do know is that my targets work really well, and we could be seeing a move up here towards 6100 this week. So that's what I'm expecting, as long as price can hold above the 59.19. Now, I understand that 59.19 is also about 100 points or so away, and this level up here that I have is 6,091 is about 70 points away. So you have a good fluctuation here, or a good range of 100 up, 100 down going into this week. So we'll kind of see what they want to bring us. For right now, though, my overall sentiment stays bullish. I want to buy the dip in demand zones, and that's why I'm about to show you the smaller time frames. So over here in the daily, one thing that I'd like to point out is the beautiful buy trigger that I was able to give you guys for 2 weeks. And we came in there, after the pullback, we found some buyers, and then we pushed up very nicely here after the election. Now, a couple things I want to show you that are unique on the daily going into this week is that we went from white to green. That means the momentum changed. Notice that your EMA clouds are also pointing up. This shows a lot of strength and overall price. So we want to take note of that. And we always want to know, where's that 9 EMA? And right now it is confluent with the trendy edge. And we know that once we get over the trendy edge, if we come back to it for any reason, I would be looking for this to now turn into a support level. Okay, so my first trigger long for this week would be down here at 59.20. All right, which would bring us close to the 9 EMA. So if we get that pullback, this is my favorite spot to get long. But please, as a disclaimer, don't think this is the only place I'm looking to get long. There's even smaller time frames from, the daily that I'm looking at getting long out of. Okay, so this is just from a daily perspective. Please understand that. My next trigger long is right down here, right in the middle of the zone, if you will. The zone's a little bit wider than just this line. So I understand that if this doesn't hold, this entire zone right here is where I'm interested in also going long. Now, why would I keep trying to buy the dip? Because overall, these banners right here have my Fibonacci coded into them. So I don't really need to look back or figure things out. I know, hey, these are all lining up to tell me to buy the dip. Okay. Let's go ahead and go to the smaller time frame. So the 4 hours is going to look a little bit different as we approach this week. We have this big zone down here. Again, it should be confluent with a lot of the levels I just showed you. This is where I'd be looking to go long. We'll go into more detail about that inside the room if we need to. But for right now, it's pretty straightforward. Now, why I said it looks a little bit different is because you don't have any red boxes up and above price right now. Now, you can find some structure right here that is going to be resistance tonight, okay? If I come over here, this is so for anybody that might be listening to me for the first time, so I give these levels and places to get long and or short every single week, but every day we have a daily blueprint. And this is what I use primarily to trade the futures or trade SPX. So a lot of people are always like, man, what are you doing on SPX? How are you doing this? Where are you getting these sort of levels and so forth? I just do a daily blueprint. I send this out to all of our members, and it's really straightforward. You can see that, this chart, I didn't have a red zone, but from a perspective of intraday trading, starting tonight when the futures open in just about 3 hours, we actually have this topping wick that let me know, hey, it's time to sell off. And by the way, while we're sitting here, guys, did we not call this perfectly? On Friday, I told you I was looking for a target of 6,000 and I think 24, and we ended up closing at 6,023. We did really well. And I'm just, I'm really happy about the levels and so forth. So tonight, from an intraday perspective, if the market were to gap down, this is where I'm looking to buy. If the market gaps up, but doesn't get above this proximal line of 6,032, this is a short area. I want you to try and go short with your stop above the 6,032. Okay. Now, if we gap up and we stay above 6,032, this is going to be your line in the sand. I want you to try and stay long above this level. So this is pretty much your line in the sand. If we gap up tonight, it'd be like, it'd be almost 10 points. If we hit that level, look for it to reject. But if we gap over that, that's going to be your support to stay long. If for some reason we gap all the way over this level, then this level right here becomes that line in the sand. Stay long above it, look to go short below it. Okay? Pretty straightforward. And again, if we gap all the way down in here, this is where I'm looking to go long. Okay? All right, so that's the ES futures. Now let's come over to the Nasdaq. So we're going to collect here. We're going to come over to the weekly, start from there. This is changed up a little bit. This level worked very, very well, and I've been giving you this level for the last 4 or 5 weeks. And so the Z24 is really unique, and I just want to make sure that everybody understands it looks different than if you were to just type in the NASDAQ. Now, the reason why we came over to the Z24 is because of the contract rollover that happened a while back. And you could just use the NQ if you want to. But the unique part about it is that, when you look at this and you were to draw a line here, yes, we made a high. But if you went to the NASDAQ, we're actually sitting over the structure quite like this. Okay, now I'm going to continue using this chart because this is what I've been using. And really, at the end of the day, it's not going to mess anything up because we are over this and we did make a new high according to this chart. I understand it looks bigger if you go just to the NASDAQ, but we're going to continue using this. My immediate support is going to be right here between these two numbers. This support obviously has been working really well. My targets from a weekly standpoint are 21,574 by 22,082. All right, and then of course up here at 22,703. Let's go ahead and go into the daily. This one also worked very, very well. I left that on there just to show you that beautiful level that was presented. And if you followed it, you made a lot of money. Now, this also turned into a demand zone, you guys can see. So my next trigger was placed right above there. So basically a zone. And then I have a trigger long up here. So that would be a buy the dip scenario on the daily. What we would be looking for here is a pullback back into the 9 EMA, back into the trendy edges. We have 2 trendy edges there. That's called a stack. So I'm looking for that to be pretty powerful. Okay. Now, your resistance for tonight, I'm basically just using the daily edge that's underneath there. And if we can get up and over that, that's great. And then again, my trigger short is up here around 22,000 and some change. Remember, all of these triggers, we teach a unique, not a unique, I shouldn't say unique. We teach a specific way of getting in on those on a smaller time frame. Okay, so these aren't just blind triggers, but they do work very well. Let's go ahead and go over to the, let's see, this one to a 30-minute. Give me 1 second. So same thing over here. The 4-hour looks pretty interesting, but just like the ES futures, there's no supply. Stay the course. Stay long above the 4-hour 90 EMA and take a shot if price comes back to this green demand zone. All right. Next is your intraday. So tonight, starting at 5 o'clock Central Time, the market's going to open up. And it looks a lot like the ES futures. I got a green zone down here. I have a resistance level here. It didn't quite sell off like the ES. So we're just calling this resistance, not supply at the moment. Same thing. Same directions that that I just talked about on the ES. If for some reason we were to drop down here, I'm looking to buy. If for some reason we were to push up into this area, just look for it to be resistance. Be careful. You might be able to short this pretty easily. Just place your stop over the highs if that's what you're looking to do. But I personally don't want to go long here unless it can prove it could stay over this level of 21,265. Okay. Personally, I like a clearance rack. I like to buy things when they're dipping. And so that way, we buy the dip and then we wait for it to rip. But in this case, you're kind of stuck here between two opposing zones. We'll have to see how the market opens up. If it's any indication, Bitcoin's any indication of how the market might open up, then we might get a huge gap up. We're just gonna have to see. Let me come over here and look at pull this up. I mean, my Doge. I hate to go off track here, but I sold. I took some trims here at 29 cents. I was just kind of blown away of how high this thing went up today. So I went ahead and took some trims, and it's kind of crazy. Before my birthday party yesterday, I was just feeling really, really good, and I like tripled down on my Doge position, and it paid off big time. So I went ahead and trimmed today. So yeah, we got in at 10 cents, and then I really put a nice little hefty amount on there yesterday before my party, and I was getting ready to come in here and do this a couple hours ago, and I was like, holy crap, man. So that's working out really well. What's Bitcoin doing? Give me 1 second while I looked here. So, come on. Where are you? Yeah, Bitcoin's ripping too, guys. So, that's the thing. If we come over here, which is our next and our last chart here. And by the way, guys, please give this thing a like, right? Give me a like. Let me know it's been working for you. I really appreciate it. And I am opening up my phone real quick just to take a quick look and just see where Bitcoin. So Bitcoin's showing it's pulling back, of course, because the market's getting ready to open in a couple hours. That's how they do it. But it got up to almost 81,000 and it's currently at 79 and a half. So, it looks good. It would look better if we could get back up to 80 or so, or 81 before the market opens. I just want to see what kind of impact is on here. So speaking of, let's get over here to Bitcoin. This is the big picture. We hit our 2024 projection, and this was our new 2024 target if things work out for the bulls. I'm looking for 88 to 104. It's a nice push so far based off of the data just on Thinkorswim, not Robinhood. We closed at 77, and it looks like, as far as Robinhood is concerned, it pushed up here towards my next target. So I'd like to get over 80,263, and if we could do that, we should be able to see 83. If we were to pull back, I would like to be a buyer at around 64,000. Okay. So I would add more in my crypto account at around 64,000. And of course, this is the bigger picture. All I'm doing is those words that you have here. I'm taking fibs and I'm placing them, I believe, right here. And I had them here. All right. And then we made this little move on Friday. But this is a level where I want to buy the dip again. All right. And then also where I just said around 64. And then right here, this is a demand that's been tested. I would also add here. And right here, crypto is screwed if we close under here. All right, so this is just the blueprint going forward. And this beautiful trend that we have right now, If I were to come up here to the high using Fibonacci, this beautiful move here, right? It's not broken unless we close under 39. So the overall trend, buy the dip in the right places, and this thing is really paying off, okay? So that is Bitcoin. That is the broad market analysis. My overall sentiment, bullish. Let's buy in a demand zone. And please like this video, and I really appreciate your support, and we'll see you guys tomorrow morning.